welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we discuss all about market fundamentals, which way are the markets really headed from here, even though we have already seen the Nifty and the Sensex hitting all-time high levels in today's intraday trading session as well. Joining in to help me understand more about markets is a very special guest. I'm joined by Mr. Kranti Batini from Wealthmill Securities on this edition of Market Meter. Good afternoon, Mr. Batini, and thank you very much for taking out time for us. It's a good day for the markets. We've seen both the indices after a long haul of consolidation, yet again seeing all-time high levels. The Nifty also inching closer to what 15,940, and the Sensex also hitting all-time high levels. Your take on the markets?
Sakshi, that we have been talking about the range-bound nature of the market. Market was in a range of Nifty 300 points from past couple of weeks' time. Right now, the one good thing that happened to the markets today is Nifty crossed and stayed above a crucial resistance level for Nifty at 15,850. That gives a lot of momentum and positivity into the market, and again, it's bringing the buying interest to back in the market. But investors need to be slightly cautious at this point of time. They can be in this range bound trade that we have been discussing on your show. This is very good for delivery based trader to play a range bound trade in these markets. But one thing we need to clear at this juncture is the earnings season is very good. It's not disappointing so far. IT companies have been giving better guidance, better than expected, and also the fears of the third wave is not surfaced till now. Thank God for that. And also the rain gods have been very kind to the nation. The monsoon has been progressing very well in past couple of weeks. So that's bringing back again the positivity, and we are at all-time high again today.
Absolutely. So a whole lot of factors working in favor of the markets and the trajectory going forward. The traders need to be cautious. At the same time, the markets are definitely inching higher on the back of positive earnings and the macro factors such as monsoons and other factors too. Now let's talk about a little bit more on the earnings front as well. We have seen that TCS came out with the earnings last week. Infosys has come out with good set of numbers. There's a big beat on the top line. The profits have inched up higher as well. Just a minor miss on the margins front. But again, they have raised the FY22 guidance as well. What is your thought here on the Infosys numbers, and what are you advising investors to do?
Sakshi, hope our viewers are remembered from past 4-5 months. We have been educating investors on your show, especially for the investors to be in IT space, and the multiplier effect can be in the mid-cap IT space. That's how we have been discussing on your show.
Sure.
In line with our expectation, the numbers are at par with the guidance. So what we can expect from IT companies is in line with our expectations. So the same rally can continue and the positivity can be continued next couple of quarters, and IT is the best and sweet spot to be in. And investors with good risk appetite, high risk appetite, I can say, they can be in the mid-cap IT space. We have witnessed a fabulous rally in the recent listings, especially in IT space like Happiest Minds. That stock also we have discussed on your show a couple of times. That stock have given 100% returns, surprising note. And right now the focus and the liquidity is coming towards IT because of the visibility of the earnings and visibility of the business. So IT is the sweet spot. The investors can come in and stay invested in IT at present.
Okay, so IT is the space to be invested in even at this current juncture. We have been seeing that the results are getting rewarded, the stocks are getting rewarded, and the multiplier effect, just like how Mr. Batini pointed out, is going to be seen in the mid-cap space. And rightly you pointed out that, we have been seeing the entire mid-cap IT space really buzzing in trade. Whether we talk of Happiest Minds, like you pointed out, you've also recommended Subex in our show at a very early stage, and it actually became a multi-bagger stock for all our investors also and the viewers who were watching our show back in February when you had recommended this stock. Apart from this, you've also discussed stocks like Quick Heal Technologies. So a whole lot of these IT space stocks have run up quite sharply. I also wanted to bring one other stock in front of you, and that is L&T Technologies and L&T Infotech. In fact, these stocks are also getting a lot of traction We've seen Wipro coming at an all-time high levels too. So, most of these stocks are actually coming at record high levels. There is a push. But what else, apart from the IT space that you feel that is something that investors can definitely keep on their radar right now?
Right now, Sakshi, as we have been discussing from quite a long time, apart from IT, investors can look into autos. So if we observe the auto numbers have been month on month guidance has been going up on a higher note and a positive note. So investors can look for opportunities, investment opportunities, serious investment opportunities in IT. Apart from IT, they can look into autos, especially auto ancillary sector is poised to do well, especially stocks which are supplying wheels, supplying auto ancillaries. They can be in a better spot, and the margin of safety is very much high with respect to auto ancillary sectors are concerned. So investors, apart from IT, they can look auto ancillary sector and stock specifics. They need to look and stocks with high margin of safety they can enter. Probably in next coming shows we can discuss with respect to stock specific in IT in auto is concerned.
Right. So IT and auto ancillary pack, that's where you need to keep your focus on. Apart from this, the other sector that has been gaining traction of late is the realty space. Help us understand what is really happening here. You have been discussing a whole lot with us in our previous shows too. You recommended a few stocks from the realty space as well. And infra realty kind of a space also has been buzzing off late. Is it time to really put focus? I mean, like there is hope that perhaps the demand revival is happening after the lockdown. Is that the case? And that should be something that investors should look at from a long-term perspective now?
Sakshi, with respect to reality is concerned, they were laggards in past 18 months. We have not seen the stocks performing because of various reasons. One is the lockdown is concerned is a big caveat to reality is concerned. But if we check stock specific action is with respect to reality stocks are concerned, it is a regional specific. Stocks which are in the west, like Mumbai and Pune, they are because of the reduction in stamp duty and also incentives. Yesterday, yesterday only, Maharashtra government have announced redevelopment incentives for the builders. So these are the positive factors that have been leading the IT pack is concerned, especially stocks which are with respect to located in Maharashtra and
Yeah.
especially in Maharashtra and Pune is concerned. And also we can see if the national level as a reality space is concerned, as once the economy comes into the positive territory, one of
Mm-hmm.
the sectors that is going to get benefited is reality. Indians always tend to have their investments in uh, tend to take real estate as the one of the best investment sector is concerned. So
Sure.
right now, and one more factor one need to observe is right now people from the city centeredness to they have been moving and investing towards the suburb areas. So
Sure.
there is much activities happening in the suburbs than the financial centers or the middle of the city centers.
Hmm, absolutely. So realty space is also going to be keeping to buzz, and you should definitely have it on the top of
As
your
a
mind when you're
stock,
deciding.
yeah,
Yeah.
as a
Can you
stock
hear me?
specific, we discussed with
Yeah.
respect to reality. Yeah, I can hear it. With respect to stock specific is concerned, on reality, we advised on your show Kolte Patil to the investors at 220. The stock has been inching up higher.
Absolutely. So that stock also you can definitely keep on your radar. Apart from all of the secondary market space and the sectors that we have been discussing, which should definitely be, the preferred sectors that investors should keep an eye out on. I also wanted to take your view on the primary market space, and that is the Zomato IPO, which has been the talk of the town of late. And we have seen the investor frenzy around this IPO, the kind of numbers that came in, phenomenal numbers from the anchor book. The retail portion got oversubscribed, just within few hours of opening on day one. And the other portions are also getting increasingly subscribed right now. Your take on Zomato IPO and what should investors really do here if they're still in double minds as to whether they should go for it or not, because 2 more days still remain for the IPO to be open? And remember, the retail portion is already fully subscribed. So even now, if somebody wants to invest, is it the right way, or should they only wait for the listing time? What would you advise?
Sakshi, with respect to Zomato is concerned, of course, there is a big buzz around the corner in the financial markets across the globe. People have been talking about Zomato IPO. But as we have witnessed a handsome response, a humongous response from the anchor investors, nearly 184 investors subscribing for Zomato IPO with nearly 1.5 trillion rupees, 1,50,000 crores, is astonishing numbers with respect to Zomato IPO is concerned. But apart from interest, what it reflects in Indian market is the kind of attraction the India is attracting with respect to Indian consumption story is concerned. It's a clear indication for Indian markets. It's a very positive thing. Apart from the business model, it is a digital play, and it's attracting the money and business interest, buying interest from all corners of the world. So for investors is concerned, of course, many voices we have been listening from the all the corners. Since
Sure.
it's not a cash making company, cash burning
Yeah,
company.
yeah,
So all these
absolutely.
concerns are there. But one thing we need to watch is the buying interest is humongous at present point of time. So investors with high risk appetite, they can definitely subscribe for Zomato IPO is concerned. But for an investment proposition, probably we can wait post listing. There will be a cool
Mhm.
off period for the stock, and we can see 1 2 quarters performance, financial performance, how they are going to be turned as cash positive in the initial quarters of the listing. We need to see, and then we can make serious investing decisions with retail investors are concerned, or as a portfolio manager. Okay, I will look into investing in Zomato IPO after seeing couple of quarters
Sure.
performance with respect to Zomato IPO is concerned. One of the thing
Absolutely.
we need to think about Zomato is the entry barriers are very less in this
Yeah.
company, because
Yeah.
technology disruption can spoil their sweet earnings at any point of time. That is the only concern we need to wait. Suppose Indians are very price conscious people. If some other operator is giving better discount, if someone enters into the market, they want to burn more cash in terms of the attracting investors and attracting the consumers by offering more discounts. These are the companies are expelled, or these are the companies are poised to disruption in the IT
Sure.
space is concerned.
All right. So, taking that point as well. So, for long-term investors, serious investors, you can perhaps also wait up until the listing point and then see a few quarters performance and see how the company is really, coming back into the positive as far as the books are concerned. And once those indications get clear, then you can definitely take a decision to step in for the long-term investment as well. Moving on to now your stock-specific recommendations. Of course, you've been giving some very good recommendations on our platform, and the investors have actually made a whole lot of money by investing in your recommended stocks too. Let's talk about the star picks first, and then we'll come to a new recommendation as well for today. Two stocks have actually given sharp returns in the past that you had recommended. One is from, again, the mid cap IT space, Quick Heal Technologies, and the other one is Schneider Electric. Both of these stocks have actually given stupendous returns in this time period as well. So congratulations to you on that, and help us understand, all those viewers who had invested after your advice, what should they do now?
Sakshi, with respect to Quick Heal Technologies are concerned, as we have been discussing, the number
Yeah.
of PC sales have been going up, and Quick Heal Technologies as a antivirus and cyber security space is concerned, Quick Heal Technology is one of the Indian top leader. So we have been, even though despite of many voices are coming with respect to Quick Heal is concerned, we were strong in advocating Quick Heal Technologies. So the stock has delivered nearly 90% of returns to the investors who invested after our call and who were hearkened to our voice. So they can stay invested probably at 325, these kind of levels. They can take some small profit from the table. These are the very good business models, so they can stay invested, and any dip the market gives during these kind of market times, if the market is giving all-time high. If the market is giving uh, some kind of small corrections, they can buy. With respect to Quick Hill is concerned, they recently completed their buyback. It's a debt-free company and with a strong management. So Quick Hill Technologies can be a long-term bet for the investors. And in the mid-cap IT space, small-cap IT space, Quick Hill is the better position to take the advantage, as the number of PC sales have been going up due to the work from home culture, and also as the
Sure,
economy turns
sure.
positive,
Absolutely.
sales are expected to go up. So Quick Hill Technologies is the best stock to position for the investor.
Okay. Can we talk about your new pick as well? We're actually running out of time, so we'll just move on to the new recommendation that you have for the day for us.
See, this week we have a stock by name L&T Financial Holdings. The main reason is we are, you can say we are early birds. How we predicted autos and how we predicted earlier with respect to IT is concerned. So
Absolutely.
L&T Finance Holdings, the main reason to advocate L&T Finance Holdings because of the pedigree of the group of the company, and also as the economy is turning back, we are witnessing a good monsoon, normal monsoon. L&T Finance Holding, with a strong footprint of rural background, they're going to get benefited with the uptick in the rural economy. So investors can look accumulating L&T Finance Holdings at 95 levels. Any dip market offers they can buy. The stock
Sure.
can deliver nearly 25% returns in the next coming few quarters, and because of the pedigree and also widespread balance sheet with respect to uh, rural tractors, two-wheelers, and also rural economy is concerned, L&T is in a best position to take the advantage in the uptick in the economy.
Absolutely. Well, L&T Finance Holdings, keep that on your radar. 25% upside can actually be seen from the current levels of around 95 over the next 1.5 years. So keep that in your mind before investing these stock picks too. Thank you very much, Mr. Badini. Always a pleasure having you on our show and discussing market insights as well as your recommendations with our viewers. Thank you.
Thank you, Sakshi. Pleasure is mine.
All right, and then let's move on to see how the markets are really trading at, at this point in time. We have seen all-time high levels being achieved. You can actually see the Sensex currently hovering around 53,232, 328 points up in addition, 0.6% gain. Look at the Nifty 50 as well. It's currently trading at 15,938 levels. There's an 85 point of an addition there and 0.5% uptick. The Nifty Bank is also inching up high. In fact, it is outperforming the benchmarks right now, 291 points added, 35,959. And remember, in our morning show, in the first take show, we had discussed with technical experts and they had already recommended, Budit Goyal had recommended to us that the markets are going to be seeing all-time high levels in today's trading session, and that has really happened both for the Nifty, the Sensex, and the Nifty Bank too. He had clearly said that he does believe that 35,700 will be crossed in today's trading session and 36,100. Keep that in your mind because he believes 36,100 can also be the next target that the Nifty Bank will achieve. Also, for the broader market space, there is movement up there, but it's definitely a tad subdued. When you compare it with the benchmarks, they are underperforming the benchmarks, but remember that they are both again trading at all-time high levels too. Let's move on to the sectoral performance and see where is the really participation coming in from for the markets today. So it's the stocks are like IT, which are definitely at the forefront. Again, leading the rally from the last few trading sessions. Financial services up 0.8%. Private banks, again, the leading giant in today's trading session. 0.5% uptick for the metals as well. What's not really performing is the autos. They are down 0.5%. Pharma index is not really performing today. FMCG is flat to negative, and PSU banks are also subdued in today's trading session. But overall, the markets are inching higher on the back of stocks like from banks, financial space, IT, capital goods. These are the sectors that are really helping the markets to stay at those all-time high levels. Let's see how the Nifty gainers and losers are also placed at this point in time. For the gainers, of course, there is no surprises there. All the IT stocks, HCL Tech, Tech Mahindra, Wipro, all-time high levels for the Wipro here too, 2.2%. HCL Technologies is up 5%. The targets also shared by Mudit Goyal in the morning show. He had given targets of HCL Tech, and those targets have also been met as well. L&T from the infrastructure pack and HDFC Bank is inching up higher today. These are the counters that are definitely on the top of the charts as far as Nifty 50 is concerned. Let's look at the losers and see where is the action subdued today. ONGC, Eicher Motors, Coal India, Maruti, and Asian Paints down by about 1% to almost 4%. Look at the subdued action in ONGC; it's down 3.25% right now. Apart from this, if you see, there are some participations from autos, from PSUs, and from consumer products as well. So these are the stocks that are actually not really contributing. Overall, the market breadth is quite strong. They have inched up higher from the lows of the day. There was a very subdued flat to positive opening that we had, but they built onto the gains up until the halftime. Remember, it's just 2.5 hours of trade remaining, and anything can happen. Remember, it's the weekly expiry as well. So whether we'll sustain at these levels, inch up higher, or actually see profit booking taking place, we'll keep you posted on the markets and the way experts are really seeing how the markets are going to be moving ahead. For that, you need to like and subscribe to our channel, hit that bell icon so that you can get notified whenever we add a new video, and also stay connected with us through all our social media platforms and visit our website money9.com. Thanks for tuning in.